What's going on, guys? This video is a follow-on from yesterday's video on how I missed out on 80 bags of profit trading options. Now I'm going to look at some opportunities that I've spotted, and I better dig right into it straight away that I'm not a financial advisor and this should not be taken as financial advice. I'm not recommending to buy or sell any stocks or options that I talk about today. I'm simply going through some opportunities that I've spotted and some opportunities that I've taken. Now we're looking at a Telstra chart here. We can see it rally to the upside and then it did a bit of a pullback, and what I didn't notice was that it's actually a wedge that was forming, not a bull flag. Not that it really matters, but this is what I was expecting to see, more of a channel. But it was I've been paying attention to this since mid-December, and I've been waiting and waiting and waiting for this trend line to be broken, and finally it happened, and it looked really good on the 6th of December. 6th of January, where it broke out and retested the trend line. That is, to me, that is the perfect entry. What usually happens is it either completely fails because that's a bull trap, or it completely rallies. What I didn't expect was for it to go completely sideways. So this I found out was a bit numb, a bit dulled down because of the XJO, which is the Australian index. It was kind of weak and flimsy on these days, so there was no real drive and sentiment to push it to the upside, even though this is based on technicals. It's a technical breakout. So what we have is a very slow breakout. Finally, this afternoon at around 2 o'clock, 2:30, Telstra finally broke out to the upside. And I'm holding 307 calls that expire tomorrow. So fingers crossed for that one. I had about a little over a week expiry when I bought here. And I'm also holding 308 calls for next week expiry. So I've got an extra week on that one. And what I'd be looking at is I'd be aiming somewhere around 319, 320. That's the target that I'm looking for. This is the opportunity that I have spotted. Now, if we look at the price of the options, we can see that buying into something that's short-term expiry at 307, it probably won't be worth it. You'll be paying about 1.5 cents, the midpoint, possibly even 1 cent for this one. So it's really, that's huge degenerative plays to buy something with 1 day expiry. It's definitely super high risk. Even 1 week expiry is high risk in general. I normally aim for something that's 2 to 3 weeks is the sweet spot, because that's something that can return multi-bags with the right timing. So looking at 308, that'll be about 2.5 cents the midpoint, and that would yield, if it goes to 320, 319 on expiry day, there's an intrinsic value of 12 cents. So we're looking at 2.5 cents to 12 cents. So that's obviously a decent multi-bagger there. That's about 5 bags, just under 5 bags. But obviously there's a huge risk component. I can't emphasize enough how risky options are with short-term expiry, or options in general. So that's an opportunity I've spotted. This was not necessarily an A+ setup, but this was definitely somewhere in the A to B range. It's definitely a good quality setup. It just didn't quite break out as I expected. And moving on, I spotted Qantas today, or rather it was pointed out to me by someone on Discord, which is great. It was this trend line here, and there was a horizontal gap fill. So I moved that one out of the way. We can see that Qantas fell down all the way to, I think that was 460, 461, which was a gap fill. And you can see the gap here that occurred all the way down, and it also had support at this trend line here. So 2 levels of support, nice little bounce. And what we're seeing actually is, if I bring this back down, it ended up rallying back to the gap fill, and it's weak. Typically something that bounces off a gap fill like this, you'd be looking for something with high volume conviction to push to the upside, but that didn't end up occurring. I have a feeling COVID is dampening things, with the lockdowns. Victoria needs some kind of passport to travel between interstate. It's very bizarre, but effectively what we have is negative sentiment. The XJO is kind of weak at the moment, and what we're seeing is a break of trend. If I just bring this chart, I just connect it again, And what you can see is we've broken this trend line here that originally acted as support. And what I'd be looking for in this situation is, if I just bring up my drawing tool here, I'd be looking for a bounce down, perhaps sitting at this weak little horizontal here at around 479, and then I'd be looking to buy puts. Now the reason for that, the reason I'm waiting and not buying right now, is because the expiry is a little bit too long. It's 5 weeks expiry. I'd be paying something like, for 460, I'd be paying something like 15 and a half cents. That's not something I want. You can't really make multi-bags when you're paying that much for a stock that really doesn't move too much as well. So hopefully in a few days, hopefully in a week or two, it ends up doing that kind of play where it bounces, lingers, and then eventually falls through. Now this is on the assumption there's no fundamentals that drive it in one particular direction. This is more of a technical play. So I'd be looking for, I guess, maybe 2 weeks expiry, 2.5 weeks expiry, where the price of the options will drop to something like, if we can see here, 21st of January. So that's 1 week away. So for 460, you can see the price has dropped from quite a bit compared to the February calls here. Sorry, February puts. I'd be looking at something like maybe 8 cents to pay for a put for 460, ideally. Anything below 10 cents, that's for sure. And that would be a target is roughly 460, which is here, which is this horizontal as well at the bottom of this wick. And if it breaks through, the idea is obviously to get this before expiry, to trade it before expiry. The intrinsic value on expiry day is the difference between the strike price and where it ends up. So if this ends up being, let's say, $4.50 on expiry day, and we have 460 puts, they'll effectively be sold for 10 cents profit, right? 10 cents per option is what you'll be able to sell it for, roughly. The intrinsic value. So if we have 2 weeks of time and it hits $4.50, there'll be a time component. So it won't be 10 cents, it'll be probably more like 13, 14, 15 cents. It's hard to judge. I'm kind of just guesstimating here, but the time does factor in and does add on to the price as well. So that's the opportunity that I've spotted. Those are some 2 trades that I'm looking at. Again, Qantas, I'm waiting for it to develop a bit more. I'm not rushing into this trade. For me, with options, it's about waiting for the perfect moment, waiting for the perfect chart setup, and getting the most out of the trade. So I hope you found something useful in here about how I look for options, what I'm currently looking at, and what I've currently got. I hope that I guess opens your eyes to the opportunity and the potential for options trading. All right, guys, thanks.